Hello there, everybody. This is Craig at Max Trading. Today I'm here along with Eusebio, and it's a real pleasure to welcome you, all of you, to our real-time trading session for the NFP news release coming up in, just a very few minutes now. We really appreciate you choosing to spend some time with us today, and we continue to extend our best wishes to you and your family and your friends during these times of just a general concern for health and safety these days. If you like to trade the trends in stocks, Forex, futures, or most any other market, you need, of course, a very reliable system. And we know from 14 years of experience trading it that the Max trading system is the very best in trend following systems. And so today you'll have another opportunity to see Max methods at work on real-time charts. And we like that because you can't hide anything. You can't exaggerate anything. It's all right there for all of us to see happening in real time. Max courses, by the way, will teach you how to use this trend trading, trend following system, the methods. It also provides you with the indicators, the templates, and so forth. And classes are available anytime by video. You can learn according to your own training schedule, and you can get started almost immediately. And I'll put a link for that in the chat for you in just a few minutes here. Naturally, we don't know. We have some suspicions, but we don't know what numbers will be reported in the news release today. And we have no idea how the market will react. Sometimes it's very strange. Sometimes it does exactly the opposite of what we might suppose it would do. But regardless, we do hope to see some good price action today. And if we don't, then probably Eusebio will choose to force a trade, which just means that he will enter a trade that is purposefully against what Max traders would normally do. But we want to have something on the chart for you to see. And if nothing else, you'll be able to observe how the Max trading system handles price action that's not so good and still protects the account and maybe even ekes out a little bit of profit at the same time. So if we take a trade that seems too risky, that's because it is too risky, but we want you to have an opportunity to see the system at work. Please do remember, this is not a trading room, and we are not providing trade calls. Nothing that you see or hear should be taken as an entry or an exit recommendation. All of it, everything, is for educational purposes only. Eusebio is prepared to take us into the charts for this session. Some of you are meeting him for the first time, and you're going to be very pleased to discover that he is such a highly skilled trader and also really enjoys helping his fellow traders. Plus, he's just a nice guy, so you're going to have fun with him today. I'm glad you could be here. Eusebio, I think that's enough preliminaries, but we do want to thank you for taking a couple of hours out of your day to share with us, and the microphone is yours.
Thank you very much, Craig, for this introduction. And indeed, I would prefer to be outside today because we have a very, very sunny day and agreeable weather, and I would prefer to go walking this afternoon. But we have the non-farm payroll, and the non-farm payroll is always a very important economical news. The traders are waiting to have some idea what the future could be, especially for the US dollar. So the news. So first of all, I'm happy to see you today in the room. I hope you are all fine. I also welcome the participants who have enrolled in the webinar and who will watch the recorded video, because any of our events are recorded and made available. So just contact Craig if you want the video, and it will be sent to you with great pleasure. We have the non-farm payroll now in 5 minutes, and the non-farm payroll is always a very difficult news report to analyze. First of all, we have the unemployment report for USA and Canada. Today, Canada, it's a bit simpler, but the concept is the same. In fact, in USA, we have the non-farm employment change and the unemployment rate, but we have also the average hourly earnings. And to have an impact in the market, we need to have not only the three news in agreement, absolutely in agreement, but we need to have also deviations big enough. What is a deviation? The deviation is always the difference between the expected or the forecast number with the actual number, which is not known for the moment. So this is why we have always to wait for the news release before taking an action. And for Canada, it's a bit simpler because we have only to consider two news, the employment change and the unemployment rate, but the concept is the same. And so my forecasts are the following. If we have a non-farm employment change larger than 390 and the unemployment rate smaller than 3.5%, then we have to consider the possibility, only the possibility for the US dollar to be bullish, and so we can go long the US dollar. And this can be emphasized if the average hourly earnings is larger than 0.4%. Similarly, if the numbers are too small or too bad, less than 150K for the non-farm employment change and more than 3.7% for the unemployment rate and less than 0.2% for the average hourly earnings, then we can consider the possibility to go short with the US dollar. And we have similar numbers for the Canadian dollar. Now, let's suppose we have a big surprise. So we have numbers better or worse than those given in my expectations. This does not mean necessarily that the price will move hugely, because it depends also how the market has previously anticipated these numbers. And if you watch a pair like, for example, the US dollar yen during these last days on a daily time frame, you will see that there was no anticipation at all concerning the US dollar, and so concerning these numbers. So I will not necessarily expect a big surprise today. The session is recorded and the video will be made available. So there is no problem for that. Yes, it is recorded. Okay. So we have the news now in 2 minutes. I'm going to display my Forex calendar, Forex Factory calendar page. But I will display it on another monitor so that I can have the number under my eyes, and because I want to see also how the market will react as soon as the data will be released. So now we have to consider also the following point. The non-farm payroll, which is due in 1.5 minutes, will be followed 2 minutes later with a revision, which is not necessarily mentioned in all the economical calendar, but this is also an important news release, revision of the previous month's data. The non-farm payroll is typically a news which has several revisions along the months because the administration doesn't always have the time to collect all the necessary data rather quickly. And we don't need to be in a hurry to consider a trade. If there is a big surprise, most probably we will see a big spike in some US pair. We will have to wait for the volatility to settle down before considering any possible trade. And I will explain that as the events will unfold. So let's wait first of all in around 40 seconds now for the numbers. And I will write the number also on my note. I always keep track of my notes, so month after month. And then I will explain what we have on our charts. So in a few seconds now. We begin to see some movement, which are usually speculative movements, which happens a few seconds or a few minutes before the news release. Okay, now normally the news is being released, And so we can see that the US dollar seems to strengthen, but let's wait for the calendar to update the number. So for the unemployment rate, we have for the Canadian dollar 4.9%, 4.9%, which is positive. Then for the non-farm unemployment, we have 372K, which is not enough to have a big deviation. Then what else? We have minus 43.2K for the employment rate, so negative number on the card. And we have 0.3% unchanged for the hourly average earning, and we have 3.6%, so unchanged for the unemployment rate. So we don't have a big surprise. So the conditions for both currency are not fulfilled to create a big surprise. So we don't have enough job creation. The unemployment rate has been unchanged, and we have seen that yesterday or the day before with the unemployment claims, which was rather unchanged, and so no inflation in the hourly earnings. And similarly, we have a bad number for the card employment change, somewhat a better unemployment rate, so contradictory, so informations for the Canadian dollar. So we can see perhaps a small increase in the strength of the US dollar, but not necessarily significant, and the CAD worsening. So I would not be surprised for that, but we don't have good situation to trade the non-farm payroll. And because we are approaching the end of the day, the end of the week too, so I don't think this will give lots of opportunities. So now I can close this file with my notes. I always keep track, and let's observe what is happening on the pair. So we have the US dollar gaining some strength. The CAD is pretty much neutral. So I can show you the number in the calendar. So this is the numbers I have noted. So no big surprise, not enough deviation in a consistent way. So now I can close this web page, and let's see what is happening. So the yen, the yen is a currency a bit complex today, because sometimes the yen is weak, sometimes it's strong due to the uncertainty, political uncertainty in Japan with the assassination of the former Prime Minister Shinzo Abe. You know perhaps that he was making a speech during the campaign for the parliamentary election today, and he has been deadly shot, unfortunately. And so this has created some perturbation on the yen, and so sometimes the yen is strong, sometimes it's weak. For the pound is rather strong today, and so considering the pound US dollar is not necessarily a good idea, because the US dollar is also rather strong for the moment. The US dollar Swiss could be an opportunity, so to go long on the US dollar Swiss. The pound yen, we can consider a long possibility with the US dollar yen. The euro yen also a long possibility, and the pound CAD, so the pound CAD long opportunity. So let's wait for the volatility to settle down a little bit, and let's see if we can see some opportunity. But the conditions are not there to have a proper trade. So what I will do when I will see valid entry setup, I will consider on one pair to take a trade, to force a trade we should normally not take, and I will illustrate our process for the trade risk management. So, but let's wait for an appropriate setup. So we can consider either the US dollar yen or the euro yen, so both are possibilities. I see the best possibilities for them. So what I will do is I will hide the other pairs. I will iconize all the other pairs, and I will tile the two remaining pairs, and I will set my max trade monitor on these two pairs, just to be ready when an appropriate setup will appear. And so I will consider a long setup on these both pairs. So and max trade monitor, Euro-Yen, load. I load a preset. Okay. Let me change a little bit the properties of the screen. That way, on both charts. Okay. So on the US dollar yen, we can see that the price is consolidating. So we have to wait for a breakout of that consolidation area. And for the euro yen, we have to wait for some pullbacks before considering any possible decision. So if we observe on the 5-minute time frame, the US dollar yen, so we can see a spike which has been created, but it is not a big spike. You see with the two bars only 33 pips, but it's better to wait for a pullback deep enough to consider the possibility for a trade. And for the euro yen, so here we have no spike at all. So perhaps the best opportunity will be the euro yen. So now the chart you are seeing is our max sum chart, which is the most elaborated chart we have within the max. Let me draw the resistance level on this chart. So here we have a clear resistance level, but I don't like the price to be so far away. So I prefer to consider the euro yen. Or let's go with the flow. So we have an entry setup which is good. So I will take a long trade. This trade is very risky, okay? Because it does not follow the rules we have with the max. And you see the trade is not executed yet. So probably we'll have an important slippage. And the trade is not executed. So this is something which happens sometimes with some broker. Okay, now it has been executed. So I have a stop loss of around 26 pips. That measure exactly. So a stop loss of, yeah, let's say 26 pips. So, and once we are in a trade following a valid setup, my setup was not extremely good because the price is very far away in the US dollar yen, in the spike we have seen in the 5-minute time frame. And let me check. Yeah, let me check on the euro yen. We have perhaps a better opportunity. Yeah, we have a better opportunity now. So what is an entry setup? Whatever the type of indicators you may use, in fact, an entry setup is always a specific price pattern. And once we get the price pattern corresponding to an entry setup, and with the max we have several types of entry setup, so we have to check if these setups are technically valid setups. And we do that by observing what is happening with some of our indicators. We have what we call conditions which are mandatory and conditions which are optionals. And when we combine these conditions, so we can say, okay, the setup is valid or it is not valid. And when the setup is valid, then we can take the trade with an appropriate risk. The risk is also a very important pillar in the way to handle a trade. A too high risk may be dangerous because we cannot have a 100% winning rate. We will always face streaks of losing trades, so losing streaks, creating drawdowns. And the secret of success in trading is to control the drawdown, in fact. And so you have to take appropriate risks, so not too big, small enough, but not too small in order to have a good, correct account growth when you are successful in trading. And then once the trade is open, we have to manage the trade in such a way to control the risk which remains on the trade, because the stop loss and the percentage of the trading account we apply to the trade correspond to the risk we have on the trade, to the initial risk, and depending on how the price is evolving, we have to try to reduce the risk. And this is something I'm going to illustrate here. So I have said we have a stop loss of 26 pips on the euro US dollar yen. I will consider the possibility to take a first profit on the pair if the price moves at least by 13 pips, so at the level here of 0.425, 0.425. So if we get an exit setup on or above this level I have drawn on the chart, I will make a partial exit. Let's do a partial exit now. So you can see that my risk on the US dollar yen is just a little less than 1%. And I have not changed my stop loss. If I make an MX, and an MX consists in closing half of the trade size, and by this I mean whenever we open a trade, we consider the trade is made of 2 units, and when I have an exit setup, so we close 1 unit, so half of the trade, this reduces the risk on the trade. You see now the remaining risk on this US dollar yen is only 0.19%. I have divided my risk by 4. And if I have an opportunity to adjust my stop loss, and I have that opportunity, I can adjust my stop loss around this area. Look how the risk will continue to decrease, and we will begin to lock some profits. So I have adjusted my stop loss. Now you can see that on the US dollar yen, the risk has disappeared, and I'm locking a profit, a small profit, but a profit. What is that profit? 0.16% should the price continue to drop and hit my stop loss. If the price miss to hit the stop loss, whenever I will have the opportunity to adjust my stop loss, I will lock more profit, or of course if the price moves in my favor and I will see another exit setup, so I will have the opportunity to close the second half of the trade also with some result, possibly some profits. And you can see that the combination of taking a partial profit and the stop loss adjustment combined with a reasonable risk on the trade, so provide a very, very powerful way to control the risk. On this small panel, you can see also the line XXX profit. This is the profit which is made if I close the trade now. So if I close the trade now, I will make a 0.5% profit. This number varies because there is still one open unit for this trade. And so what we have to do as a trader, at least with the max philosophy, is to never necessarily focus on the potential profit we can make, but on the way to control the risk. Controlling the risk is the major aspect in success in trading. Once the risk has disappeared, because we are now in a guaranteed profitable trade with a small profit, but you will see probably that this minimum profit will increase over time if the price continues to go in our favor, and never focus on the potential profit. Of course, if at some point the potential profit achieve a big number, you can decide to close the trade and be happy with that result. So now I have explained what an entry setup is, but what is an exit setup? And I will do, sorry, but I will do exactly the same thing with the euro yen. So my initial stop loss was, let's say 22 pips, so 11 pips for the minimum profit level, and 11 pips will, which is the half of the stop loss size. So 11 pips will be, so here around 0.365 at this level. So if the price succeeds to reach that level, so I will also make an MX, or closing 1 unit. MX is the abbreviation for momentum exit. So you see, these kind of information are extremely helpful in order to control the risk we have on the trade. Many traders focus on the potential profit or a potential reward to risk ratio. They say, for example, I will close my trade if I reach a 2-to-1 or a 3-to-1 reward to risk ratio. But how can they fix a predefined target profit when they don't know how far the price can go in a trend? I prefer to take what I can track. It can be half hour, it can be 1 hour, 2 hours, 10 hours sometimes. As long as the trend stays valid, I try to stay in the trend as much as possible. And so the key point is not to control the potential profit we can make, but to control the risk we are facing. Once the risk has been dropped, we still have a risk of around 1% on the euro-yen, but once the risk has been dropped, then we can consider trying to optimize the profit we can make from the trade. So in the euro-yen, we have to wait. And when I define first level of profit, this is what I call a discretionary decision. This is not the usual standard level. It is an advanced level of the max. This means that whenever I will have an exit setup, I will ignore it. As long as I cannot make a first profit important enough, I don't make my MX. So what is an MX? So what is an exit setup? An exit setup is also a kind of pattern. And an exit setup is a set of conditions we can see either with pure price action or with indicators or with a combination of both. For example, if we have a divergence in the RSI indicator, which is a momentum oscillator, so we can consider making an MX. So we have exit setup with indicators, we have exit setup with pure price action, we have exit setup with a combination of price action and indicators, we have exit setup based on time period along the day when we are facing a news release, for example, or when we are facing what I call a critical time period along the day, like the Frankfurt and the London close, like the US Open too, or the Wall Street Open. And so we have several categories of exit setup. We have also movement invalidation, movement or trend exhaustion, and trend reversal to call a long-term exit, so to close the entire trade if necessary. And so we have several types of exit setup in order to try to make the best exit without knowing how far the price can go. But the point is, among all the exit setup we have at our disposal, now with a pair like the US dollar yen, because we are in a risk-free situation and we can improve our lock profit by continuing to adjust our stop loss. You can see now, so we are looking almost 0.5% profit on the US dollar yen. We can try to be as patient as possible until the trend invalidates, exhausts, or reverse. Doing so, we will not be sure to make the best profit, because we can never know in advance what the best profit will be, but at least if the price unfolds an important trend, we will be guaranteed to make a big profit. So, and you can see that if we combine the two trades together, the trade on the US dollar yen and the trade on the euro yen, so globally we still have a risk. My risk was initially 1% on each trade, so 2% in total, and now due to what is happening on the US dollar yen, my global risk has been reduced to only 0.5%. I have divided the total risk by 1/4. I have divided by 4, sorry. And so if there is a possibility to improve some of the situation in the euro-yen, so we will be guaranteed to make a total profit on the two trades. And so let's see if the price will give us the opportunity to do that. So you can see that my stop loss now is above my entry level. So this means that even the second half of the trade is looking some profit. You see the open risk is plus 0.15. So looking a larger profit in the worst case situation when the price will hit the stop loss. Now this red candle may be an exit setup, but we have to wait for the candle to close. And let me show you when we apply this exit setup, what will happen to the trade and to the two trades together. But we have to wait for the candle to close. Now we have indeed the exit setup. I will close my trade. So the trade on the US dollar yen now is closed with a total profit of 0.62%. And you can see that this has helped to reduce also the global risk remaining with the other open trade, so the euro yen. So despite my risk on the euro yen is around 1% due to the profit taken on the US dollar yen, the global risk, if the price hits, unfortunately, the stop loss, so the global loss will be only 1/3 of 1%. If I close the trade now, the total profit will be around 0.5% profit. And of course, this kind of trade risk management requires to have a perfect knowledge, a perfect mastering of all the entry setup we have and all the exit setup we have too. The bias I see for the US dollar yen and the euro yen are to the upside. So I'm pretty sure that the euro yen can also reach my minimum profit level. But of course, there is never a certainty in the market. So whatever the way you analyze the global context, and I will come back to the global context in a moment, you have never a 100% certainty that your trade will succeed. So what is the global context? You know that there are two main schools in trading. Traders who like to use systems based on technical analysis and traders who like to trade based on fundamental analysis. What is technical analysis? As the name speak by itself. Those traders are using a combination of technical indicators to define entry level and exit level. So, because they claim that all the information is in the price action, and we have just to follow what the price is doing, and we can time the decision for the entries and the exit with indicators. Fundamental traders, on the contrary, takes into account some information, some report, some data to drive their decision. And among these data, so we have, first of all, the data which correspond to the most important driving factor in the Forex market, because here we are in the Forex market, and each financial market has its own driving factor. So what is the most important driving factor in the Forex market? It's certainly the interest rates. And the interest rates are fixed and defined by the central banks. And so we have to follow, if we trade the 28 important pairs, we have to follow the decision, the monetary policy decision by the 8 most important central bank. So the central bank for the US dollar, so the Federal Reserve, the ECB for the euro, the Bank of Japan for the yen, the Bank of Canada for the Canadian dollar, the Swiss National Bank for the Swiss, the Reserve Bank of Australia for the Aussie, and of New Zealand for the Kiwi. So, and by observing their monetary policy, but also by observing their daily interventions in the markets, we can have an idea where the market is going for each individual currencies. And so we can observe for several months now that the euro is weakening. We can observe that the yen is weak. We can observe that some commodities, currencies like the Aussie, the Kiwi, the pound may have some strengths, but it's not enough. we have to follow also other reports or other events. A very important class of events are the geopoliticals, what is happening around the world. And these last 5 years we have experienced, and we are still experiencing, some very important geopolitical. So during several years we have been influenced by the Brexit, and with the Brexit process we have seen the influence on the pound and the euro. Then we have had the pandemic with the COVID, which has influenced a lot of currencies around the world. And now we are facing what is happening, we are facing the consequences of what is happening in Ukraine. And these elements are more long-term problems. Their evolution is not necessarily fast, but we have to follow them because they can give an idea where each pair can move on the longer term perspective. So then we have the news releases, and today was an example of a news release. Sometimes a news release will create some directional bias and sometimes not, and so it depends how the market will apprehend, will understand the deviation between the actual release data and the forecast made by the big boys or some community of so specialized people. So, and the news release are just one part of the global context. But when we analyze all these points, we can have an idea where or why the price is moving in a very specific direction. So, but despite that, even if we have a correct analysis of the global context, we are not guaranteed to have a winning trade because it depends how the big boys have anticipated that global context and how they have taken their position. So before the events, the news release happens. So, and this is the nice aspect of trading. We are always, whatever our understanding is, we are always in an uncertainty environment, and this is the essence of trading. As a trader, our responsibility is to assess some risk and to decide to accept or to refuse to take that risk. And when we decide to take the risk, then the priority of the trader will be to control that risk, to manage that risk. Daniel says the good things is interest rate increases means less liquidity, which means more volatility. Yeah, indeed, at least in the Forex market. And you can observe different behavior on different market, financial market. So the behavior in the Forex will be different from the behavior in the stock market or in the bonds market. Now we can see that the price has reached my minimum level of profit. I will make an MX. So here, just wait now, MX, okay, closing half of the trade size on my euro-yen pair, and you can see that the risk on the euro-yen has dropped to minus 0.21%. I have divided my risk by 5, and I can certainly adjust my stop loss, and I will adjust my stop loss somewhere. Let me check where I can adjust my stop loss. I can adjust my stop loss around this area. So we have rules to adjust the stop loss. So I will adjust the stop loss so here. And now you can see that I'm also looking a tiny profit in the worst case scenario with the euro-yen pair. So, and in total, when I consider the two trades, of course, the trade on the US dollar-yen has been closed. So in total, I'm looking almost 0.75% profit. If I close the trade now on the euro-yen, I will make a profit of more than 1%, which is a good profit for just a few minutes of trading. So in this market, but let's see if the euro-yen will move further, because the euro is a rather strong currency today, and the yen is among the weakest currency. So in fact, the market has turned risk on. Let me check. No, the stock market are still indecisive or mixed. So we are still in a cautious mode. So, but nonetheless, the safe havens, the euro, the Swiss, sorry, the yen, the Swiss, are pressured. The euro is strong. The US dollar is still strong, and the antipode in currency like the Aussie and the Kiwi are somewhat mixed. So we can still expect some progress in the euro-yen pair. So let's see what this will do. And so in order to have a good trade risk management approach, of course, this requires to have tools which gives you how your risk is evolving along the trade. It's not satisfactory enough, at least for me, to know that we can take a trade at 1-to-1 or 2-to-1 reward to risk ratio, but how is our risk really evolving? And what are the actions we can, or the decisions we can take depending on how the price is moving to control, to reduce, to control, to cancel that risk, and at some point to improve our result. Because never forget that we can never have 100% winning rate in trading. We will always face losing trades. And the key point, as I have said previously, is to control the drawdown. Deeper the drawdown we will get, more difficult it will be to recover. Why? Because if you consider a drawdown increasing linearly from 10% to 20% to 30%, 40%, and so on, the profit to recover will explode exponentially. So if you want to recover a 10% drawdown, you will need to make an 11% profit, a little more than 11% profit. If you have a drawdown of 20% on your account, you will have to make a profit of 25% to recover. If you have a drawdown of 50%, you will need to make a profit of 100% to recover. So with a linearly increasing drawdown, the profit to recover will explode exponentially. And so it's absolutely a necessity, an obligation to control the drawdown. Let me give you a small tip so here. I know for sure that many traders are following the result of other traders on sites like MyFXbook, like Zulu Trade, and so on, with the hope to possibly follow their trades and to take similar trade they are taking. And on all these websites, so a lot of statistical informations are given, and one of the information is the drawdown, the current drawdown they have, or the maximum drawdown they have faced. Pay always attention to this maximum drawdown, and a big red flag must be obvious for you if you see a maximum drawdown larger than 25%. You may say, okay, 25% seems to be a reasonable drawdown. I can accept that, but for me it would be a big red flag. Why? Because if you have a good background in probabilities and statistics, you will realize that once you get a specific maximum drawdown, you have a guarantee of 100% that in the future your maximum drawdown will double. And this is a probabilistic problem. Statistically, there is a certainty that the maximum drawdown will double. And so with a present maximum drawdown of 25%, you can be sure that in the future, the maximum drawdown will jump to 50%. Of course, you don't know when. It may be tomorrow, it may be in 10 years. We never know when things will happen. But this is the cruelty of trading. And so this is why we have to keep or to have a big attention to the maximum drawdown we can accept in our trading process. Hello, Rodolfo and Companion. I don't know who you are, Companion, so in the Max private chat room. So, but welcome. It's nice to see you. So, so continuing the drawdown, you know that we have 4 levels of the max. We have the max primer, which is just a small introduction to the max process, and we have the max standard, which is our flagship course. I use another link here. Oh, Nilam. Okay, nice to see you, Nilam. So the max standard course, which is our flagship with the entire methodology containing not only all the entry setup and all the exit setup and the trade risk management, but also a very important aspect in trading, the scaling technique. So in the Max Standard course, we teach you how to make proper scaling. And what is scaling in? Scaling in consists in, once an initial trade has been opened, to progressively add to the trade in order to build a larger position, in order to get more profits from the trade when the trend unfolds nicely. And this is why making scalings always require very strict conditions, so in order to be done properly. But we have two higher level courses. We have the MaxSam, which goes much more in detail in the price action analysis of the chart. This is the chart I'm showing you today, the MaxSam chart. And then we have also a Max Advanced level, during which we analyze how we can optimize some aspect of the Max Standard level. And so we go deeper into the way to analyze the news release. We go deeper in the way to better choose the pairs to trade through the news release, but also through the correlations we have between the pairs and especially the strength of the currencies. We have also all that aspect of discretionary decision, how we can be a little more flexible in our rules, which are very strict in the Max Standard, but always based on the trade risk management, because it's out of question to introduce through these discretionary situations any subjectivity. And so the trade risk management is always the key point to pay attention to. And then we have also an entire session dedicated to the trade risk management, and I especially teach a very special procedure which helps to have a total control, a 100% control of the drawdown. What do I mean by a total control of the drawdown? I mean this point. So you can predefine a maximum drawdown, for example, 15%, which seems very reasonable, not too big, not too high. This is my personal choice, by the way. And if you strictly follow the process we teach in the Max Advanced course, you are guaranteed to never achieve a larger maximum drawdown. Your maximum drawdown will stay at 15%. And this is mathematically guaranteed, because controlling the drawdown is a mathematical problem, and this mathematical problem has a solution. And this is taught in the Max Advanced course. So, and you will see that nowhere else. This is only available in the Max community. Now, let's observe what the price is doing on the euro-yen. You can see that on the euro-yen, the price continues to move in our favor. So, and I have an opportunity to fine-tune a little bit my stop loss, which is still below my price entry level. And I may adjust my stop loss. Let me check. Yeah, just above, but this is a coincidence, just above my entry level, which indicate that now even the remaining risk on the remaining open unit of the pair has completely disappeared. And I am a certainty now to make a minimum profit of 1.5%. This will be my minimum profit should the price reverse quickly and hit my stop loss level. And on this point, so I will show you how continuously adjusting the stop loss while trying to stay in the trade, so will progressively increase that minimum profit, so which is the profit so given. So here, sorry, not 1.5%, so 0.97%. So let's say almost 1%. This is the minimum profit which is guaranteed if the price hits the present stop loss on the euro-yen. And so at this point, we have, as Max Trader, several choices to close the remaining open unit, either on the next short-term exit setup. For example, if this red candle closes as a red candle, so we will have an exit setup given by the RSI, but also with this red and green indicator, or with the trend exhaustion, which is far from being the case, or with a trend reversal, which may happen. We have the possibility to see a trend reversal because we have here what we call a companion indicator. Okay, a companion indicator, which is our directional bias indicator made of a slow bias and a fast bias. And the slow bias, which is green for the moment, indicate technically in which direction we have to trade. So we have to trade long, which is in agreement with the global context. So, and the fast bias now is showing some sign of divergence between the price and the fast bias. So this can indicate the possibility for an anticipated trend reversal. So we will see that. And so if we have that possibility of a trend reversal, we can decide to close the trade. So if the price follows through, let's try to do that. If the price follows through, so I will close the trade. And you will see that the profit will be more than 1%. And if the price does not follow through, so we will stay in the trade. The concept in the max is when we have an exit setup, we never push on the button immediately. We define an exit level because we want to see that the pressure which has created, I'm doing it now, we want to see the pressure which has created the setup is still existing when we want to push on the button. So I have closed the trade, and now you can see that the profit on the euro-yen is 0.69%, and so in total, so with the two trades, combined with the 0.62% on the US dollar yen, the total profit is 1.32% in just 40 minutes of trading. And of course, you can check these results on the terminal panel. So of course, in the trade panel, so everything is closed, but in the account history, so you can see the 4 units, individual units on the US dollar yen and the euro yen. Because when I have made an MX, so on this point on the euro yen, I have closed half of the trade, 1 unit, and then I have closed the second unit, so here. And you can see the result, so of the each unit and the total profit for these 4 units compared to the level of the balance, so the balance which is given so in the trade panel. So okay, so a little more than 1.3%. And now that the trade have been closed, what we can do is we can either keep these numbers on our trading panel and open new trade, in which case the result will be cumulated, or we can compound the result or uncompound our losses by resetting so the numbers to 0, taking into account the new balance, and with the new balance, whenever I will have or I will want to open a new trade, the EA we are using, which is called the Max Trade Monitor, will calculate automatically the new trade size. So in such a way that we compound our results. Any questions about what I have illustrated up to now with this non-farm payroll event? So feel free to ask any questions, so and I will try to answer them at my best. So Nilam asked 2 questions. Candles are looking different 2 time frame 2 minutes. Yeah, Nilam. It's because I'm using a max sum chart. I'm not using the max primer or the max standard chart. The max standard chart, let me show you the 2 corresponding max chart, max standard chart. So it's a chart like this one with a lot of indicator, and we call this chart a time bar chart. So each candle represents 5 minutes, okay, because we are in the 5-minute time frame. But in a max sum chart, we are using another type of price representation, and we have several choices. We can use constant range bar chart, we can use Renko bar, or we can use mean Renko bar. And here I have chosen to use mean Renko bar. And each bar has the same size. In this case, so 3 pips for the euro yen and 2.1 pips for the US dollar yen, in order to see more details in the price action, to have more potential decision for our entry setup or exit setup. And so the difficulty in such kind of chart is to choose correctly the size of the candle. And this is something I teach in the Max Sum course. Okay, and generally the sum chart will improve the result the Max provide. And the time frame is not 2 minutes because we use a chart. These type charts are called offline chart. They are not time bar chart, but when we create this offline chart, we have to give them a name which is similar to a time frame. And so it must be something like M something. It cannot be M5, M1, M15, M30, but it must be something else, M2, M3, M4, in such a way that a MetaTrader can handle these history files exactly as the time bar chart. Okay? Does this answer your question, Nilam? So they are offline charts created with specific tools. We had also such kind of divergence in the US dollar yen. The slow bias and the fast bias are showing some divergence. And so it's not impossible that we will see some temporary trend reversal in the US dollar yen and in the euro yen. So now you can see for the euro yen that the distance between the high and the low of the day for the moment is 100 and almost 76 pips. It means that the price has moved a lot. Indeed, if I show you the 5-minute time frame, so the 5-minute time frame, so the price has made so a nice movement. So here, and it was not the entire movement. If I, it was the entire movement. So no, this one. This is the highest high of the day, the lowest low of the day. So 175 pips, and the price is coming back. So. And so we can say, okay, 175 pips, it's a lot. Now taking a long trade seems very risky. And because we have exceeded the average daily range, which is around 170 pips. So any further trade will be risky. But in fact, this is not the point. The average daily range is never a good criteria to define if a trade is risky or not. Because if you think about it, what is the average daily range? It's an average. This means that approximately 50% of the time the price will make a smaller movement than the average daily range, and in 50% of the case the price will make a larger movement. Of course, when the price has exceeded the average daily range, the odds for a trend reversal will increase. But this does not mean that the price cannot continue to go further. And so depending on the context, if we have a clear context, which is not the case today, okay, but if we have a clear context, we can continue to take trades in the direction of the context. And because the context is cautious today, taking such a second trade would be risky. But you can see that on this point, we had another potential setup which was not valid. The valid setup was on this second blue candle, so a second trade was possible at this point. And we will see. I will not take it because I have illustrated the trade risk management, and so we will see how far the price will go. Okay. Which trading panel squares to buy, sell is being used on your chart? Oh, you mean this button panel, Nilam? This button panel, left corner, so here. Oh, it's an EA. It's an EA. In fact, it's an EA which is called the Max Trade Monitor. It's a tool we have developed for the Max community. It's not a free tool. There is a small charge for this tool, and it is an expert advisor called the Max Trade Monitor. And when you apply the Max Trade Monitor to one pair, you have two panels appearing, so opening. So the result panel and the button panel. The button panel helps to execute the trade, buy or sell, then an MX and then an XXX. And the data panel helps to describe, to display different numbers in terms of trade risk management. So we have the result on the stop loss, the emergency stop loss, the profit if we make an x66 at the present price. We have the closed profit or the closed result on all the units we have closed, and we have the open risk and potential open profit on the remaining open unit. Then we have these results as a percentage of the trading account, but we have also these number in pips. And then we have some additional information like the pip value of the trade, like the size of the stop loss, the spread, and so on. And this is explained much more in detail. So in the course when I explain these tools in the Max Standard or in the Max Advanced or the Max SAM course. For the Max Primer, we don't need, because in the Max Primer we don't make scalings, and so if we use simply the basic panel, let me show you the basic panel of MetaTrader with the two one-click button buy or sell with the possibility to change the size of the trade, so it's enough. But that tool will not give you an idea how your risk is evolving. And this is why many years ago we had the idea to develop that tool. So there is a trial version. If you want to test it, so contact Chris, for example, and he can provide you with 1 month trial period for this tool. You can see we have a buy button because the stop loss is below the present price. If I move the stop loss above the present price, the button will transform into a sell button. So it's really a very, very convenient expert advisor, making it very easy to handle the trade. But for example, when we make scaling, when we add additional units to our trade, this stop loss will be a global stop loss, so which will be applied to all the open unit we will have at a moment. Stefan said the companion, he answered to the companion to Nilam. So it makes trading with units and risk management much, much easier, allowing you to concentrate on the trade more. Yeah, indeed. You see, for the euro-yen, for the moment, so this is what I was illustrating. So the trade goes anywhere risky because we don't have a very clear context. So the market is still in a cautious mode. And at some point, of course, if we continue to take trade along the trend, so the trade will become a losing trade at some point. I would like to see a trend reversal just to illustrate also a trade in the opposite direction. Any other questions? Don't feel shy to ask questions. There are never dumb questions. Sometimes there may be dumb answers, but there are never dumb questions. I'm checking where we have important levels of support and resistance. You see on the chart on the euro-yen, especially, we have that red horizontal line and purple or magenta horizontal line. These represent max price levels, and these max price levels are supply demand level, or you can call them support or resistance level, which are different. Or let me close my office window because there are a lot of noise outside. It's the moment when the kids are leaving school. So let me close my window, just a moment. Okay, it's better now. It's the last day of their school. So it's the end of your school, and so they are happy to leave school, and so they are making a lot of noise outside. So these horizontal lines are supply, possible supply and demand level, or support and resistance, and they are defined once a week. And so I have defined them last Saturday, and if we observe how the price is reacting, you can see that we had some support resistance level with the magenta line. So resistance level. Sometimes, of course, the price crosses the line, which is normal, but we have seen some reaction on that level. And so these levels are really nice levels, and they are used in our trade risk management too, as potential place to consider making some profit or reducing the position we are handling. So Stefan asks, are you trading mean Renko now or still range bar? I still like to trade range bar most of the time, but sometimes I use Renko bar. Let's say, if I feel lazy, and sometimes this happens, I will use mean Renko bars. But if I feel completely fit and I can focus entirely to the trade, so I will use constant range bar, because the constant range bar gives much better details on the price action. You know what I mean? Take lots of concentration. Yes. The advantage of Renko and mean Renko, or any kind of Renko, because there are many variations about the Renko chart. So it's a high level of noise filtering, and so you can observe the chart in a more relaxed way. So the constant range bar requires a lot of concentration, but it's highly rewarding. An example of exit setup we have in the Maxis, you see these lines, gray, green lines, and we have other lines in different colors, so orange and so on, may represent potential dynamic support or resistance level. And so when the price rejects such kind of level, we can consider to take a partial profit. In this example of trade, so the stop loss would have been placed somewhere in this area. So the trade has not been taken. This is why you will see no numbers in the ESL result. So, and indeed, with the price moving in our favor, so by some, it could have been a possibility to reduce the stop loss somewhere in this area. I will use the blue line so to show the difference between the initial stop loss and the present stop loss. But still no exit having triggered for the moment. So the stop loss would have been reduced from, let's say, 23 pips to 11 pips. So the risk would have been divided by 3. In the US dollar yen, the price is still consolidating, which could be an indication of a trend reversal, or it may simply be a pause. So let's see how the market will react with the Wall Street Open, which will happen in 1.5 minutes, because sometimes the Wall Street Open, even if Wall Street is the stock market, so sometimes it has an impact even in the Forex market. And the reason is very simple. Consider you are a big foreign investor. For example, you are, let's say, a Japanese investor, and you want to take a big portion of shares in a US company. For example, in, let's say, in Apple. And as an investor, a Japanese investor, you will pay in yen. So you need to convert your yen into US dollar. And this is a Forex transaction, in fact. And so if all these foreign transactions will be big enough, this will have an impact, so in the Forex market. And the Wall Street Open is often very volatile because for a few minutes there are lots of orders to be executed, orders which have been prepared even the previous day after the stock market close. So now we have the Wall Street Open, and let's see if this will create some volatility. It seems not. But this continued to strengthen the euro and to weaken the yen. The euro is still the strongest currency with the Aussie dollar, and the yen is the weakest currency. So is the weakest currency, yeah. And so with the price continuing to move in our favor, we can, oh, no, I will not adjust the stop loss now, because it's a bit too early. And this is an exit setup, but the profit made by that MX would not be large enough compared to the size of my initial stop loss. So this is an exit setup I will not take. I prefer to use my entire risk. So because on the long-term perspective, this discretionary decision I'm systematically using now for some years provide better result on the long-term perspective. And I don't care too much because my risk has been divided importantly with the stop loss adjustment. Let's have a quick look to the pound CAD because we had not so good numbers for the CAD. And I will take the 5-minute chart instead. 5 minutes. Where is my 5-minute CAD? Oh, here. And we can see that the trend so has reversed. And strangely enough, you see that the CAD has a little bit strengthened. So creating this down movement. Despite the fact that the numbers were bad, negative for the employment change, but positive for the unemployment rate. And this is an example when the price moves in the opposite direction. So if we observe the M2 chart, so pound CAD here, we can see the kind of movement which would have been possible after the trend reversal. You see, not nice trades, in fact, illustrating the fact that the context was not good enough. And this is also what trading is. You don't need to feel forced to take a trade. I see many traders, even among my friends, my personal friends, as soon as they open their chart, their screen, their chart, they need to have a trade, fearing to miss an opportunity. But no, you need to be patient enough. If you trade an entire session, for example, an entire European session, you have several hours. If you wait with patience for the appropriate condition, you will come with less trade, but you will come with safer trades. So you will trade that, but you will trade smarter. And if one day you have no trade, so is that a problem? No. Myself, I don't trade 5 days a week. I trade usually around 3 days a week, sometimes 4 days a week, but certainly not 5 days a week. And there are days when I have no trades, but I am extremely disciplined on the way to choose my trade. And despite that, I don't have a 100% winning rate, far from that. You can see now the trade would have been stopped out on the Euro-Yen pair, okay? Because it seems that indeed the trend is reversing, as I was expecting with the divergence I have noted between the price and our companion indicator in both pairs, the Euro-Yen and similarly in the US dollar-yen. Now the trend is reversing, and we can see that the green line, the slopes, has turned to red. This means that now, even if the market is risky, not sure, we can consider to take short trades. The euro is indeed weakening. The yen is still the weakest currency, so this short trade for me will be risky. And so I will not attempt to take short trade on the euro yen. It's way, way too risky. On the US dollar yen, both the US dollar and the yen are weak currencies, so this means that the price action will stay rather choppy and essentially ranging. If I widen the chart, we can see that the price is essentially ranging in all this area. We have what we call a balance area. So the balance area is an area where the buyers and the sellers agree on a fair price for the pair, and we have to wait for an imbalance to see in which direction the price will move, probably to the downside, but not a certainty. So no questions? I see no questions in the GoToWebinar room, so despite the number of persons we have in the room. So feel free to ask any questions. Don't feel shy. I will not bite you if you ask a question. Are you doing good, Dan, with your trades? Dan is one of our former Max graduates, and he has developed his own style with the Max trading system, and we have called them the Dan signature trade because he has very limited time to trade, and so he has adapted the trading methodology to his own situation, which is what each trader should do. And for what I know, he's doing very nicely with the Max. Yeah, Nilam, the Maxam uses a little less of our indicators. Why? If you take the Max Standard course, you will see that we use more indicators. Each indicator is important and show a different aspect of the price action. But the settings are chosen in such a way that they are different, in fact. They illustrate these different aspects. But they are all somewhat correlated. If you take the Williams percentage range oscillator, which is this green-red line on the chart, and the Stochastic RSI, even if they use completely different settings, they are correlated. And so they will often show the same exit setup. Not always, but rather frequently, okay? So they are correlated. But when we use offline chart, some chart, whether we use the constant range bar or the Renko or the mean Renko, the correlation is even higher at such a point that they almost always show exactly the same thing. And when they end up to show exactly the same thing, we can drop some of them. And so keeping one is just enough. Okay, so it's always a question of correlation. Are there enough correlated to drop some of them? And this is something, again, I explain much more carefully and in details in the SAM course. This is why it is not useful. It is not necessary to use lots of indicators. There is no problem. If I take the Euro-Yen, the 5-minute time frame, like this one, you can see that with the Max Standard, we use several indicators. And so, companion is Nilam, so a new Max Primer student. So it's never a problem to use many indicators if you know, first of all, how to use them, how to interpret them, and if you use the appropriate settings. But with the SAM level, So the correlation is extremely high between all these indicators, and so we can drop most of them. Okay? Okay, Nilam? And so this means that, first of all, you need to understand how an indicator is working. You need to understand the relationship between the settings of the indicator and the type of exit setup you want to exhibit. This is why some of our indicators will call only for short-term exit setup, and some will call for long-term exit setup, and they are completely different. And so let's see if we can get a short entry setup on the US dollar yen. But I don't like the US dollar yen today. So and in the chat area of GoToWebinar, so Craig has put a link if you want to have more information about our Max Standard course. So feel free to consult that link. Similarly, feel free to contact us through our Skype or email if you have further questions, if you want further explanation. So. The strength between the US dollar and the yen is not big enough. And so taking a short trade or another long trade on the US dollar yen is not a good idea. On the euro yen is still possible, but the euro is losing strength, so because we have also that positive for the trend reversal. And so, no, it's less clear. In fact, what happens most of the time in the market is, especially for the Friday with the non-farm payroll, so if there is no real opportunity created by the non-farm payroll, so the big boys are leaving the market. Because don't forget, we are approaching also the weekend, and so if there is no opportunity, they close their position or they consolidate their position and then they quit. Where do we find currency strengths, or which pair are best for the day on Max website? Nilam, the currency strengths may be provided in different ways. We may have indicators we can add to the MetaTrader platform, or we may have external currency strengths website. But if you don't know how to use them properly, a currency meter will not help you a lot, because this is an error made by many traders. They believe that the currency meter will help them better. They believe it is some kind of holy grail, which is not the case. A currency meter. Let me show you one of my monitor I'm using, and you will understand. So here I have another platform. So I always keep my eyes on when I trade live. And you will see two types of currency meter. The one with all these colored lines which represent the behavior of each currency. So for example, the red one is the Kiwi, the blue one is the Euro, the orange one is the Aussie, and so on. And another type of currency meter which takes into account many more pairs, all the pairs. So this is a simplified, the first one is a simplified currency meter. The second one is a more elaborated currency meter, but still using MetaTrader. And we can see that now the yen is the weakest currency. The US dollar is not too far away. So we are now again in a situation where the safe havens, so the yen, the Swiss, the US dollar, are hammered, are pressured. And so these type of tools cannot be used under any circumstances. We have to use them wisely, and what I'm doing with the currency meter is the following. So if I take this simplified currency meter, you see here the yen currency is oriented upward. We can draw trend lines like on a usual chart. And when this trend line is broken and the strength of the currency begin to change direction, this indicates that probably something is happening with this currency. And so then this is an opportunity for me to look for information on different websites like Bloomberg, Reuters, the Wall Street Journal, the Financial Times, some even Forex Factory. Let me show you Forex Factory, for example, because this is something which is also very useful. Forex Factory. So here, in the Forex Factory web page, you can access the news panel. And if you click on the news panel, you will have here news events which are not news releases. You will have other information. And you see, for example, the Fed intervention by Bostic. You see, for example, the labor force survey for June in Canada. You will see some article about Shinzo Abe assassination today, of course. And so lots of news. Many of them may be opinion, but some of them may be useful analysis. And you may find in all these headlines some reason why a currency suddenly change behavior. And if you understand the explanation given by these headlines or articles, then you can change your mind about the currency and change possibly or confirm the directional bias you will have to trade with the corresponding pair. When you take a specific currency, you have 7 possible pairs to trade. Okay, for example, if you take the euro can be combined with the US dollar, the yen, the pound, the CAD, the Swiss, the Aussie, and the Kiwi. So you have 7 pairs you can consider. And by, again, observing the currency meter, you can have a good idea which pair to choose among these 7 pairs. For example, for the moment, trading the euro against the yen or against the Swiss may still be a good opportunity. But you need to understand the context behind the currency meter to use correctly the currency meter. By itself, a currency meter is simply mirroring what is happening in the 28 pairs. And so it provides you no other informations, no better information, but it provides you another visual analysis of the currencies individually. And when something is happening on this currency, for example, you can see here that at some point the pound has broken its trend line, so perhaps there is something happening in the pound. Perhaps not, perhaps yes. And then it's your task to find what is happening, to try to understand what is happening, to possibly change your mind in the way to trade the pound pairs. Okay? Never forget that an indicator by itself is never, ever predicting. There is no predicting in technical indicator. They are simply showing in a different way what the price is doing. Even when you draw a supply or demand level through different types of analysis, so these supply or demand level will not be predictive at all. They may be predictive when you make these analyses based on more elaborated data linked to the market activity. What is its name, please? Oh, the simplified indicator we are using in the MAX is called complex. So complex, you can Google it, and so you will find it. But in the MAX, the version we have tweaked that indicator. So it will be a bit different from what you can find with Google. But I really invite you to understand what a currency meter is before considering to use it. Otherwise, it will be a problem to use it. Okay? And you see, it's not because the trend was attempting to reverse in the US dollar yen, then this is confirmed. Now, the trend, you see, it's changing from a downtrend to an uptrend, so the trend reversal is not a certainty for the moment. And this will probably happen also with the euro-yen, in fact, because the US dollar seems to regain some strength. And this is not in the slow, but this is not a repenting indicator. In fact, it seems to be a repenting indicator, but it's only impact the last candles simply by the fact that this slow bias is showing what is happening in a higher time frame. And so it's normal that along the candle in that higher time frame, the color can change depending what the price is doing on that higher time frame candle, which can necessitate many more candles in the time frame we are trading. And you can see that following only technical indicator is not enough. I have said, okay, this short trade may be risky due to the present context, which is a little in favor of the euro and the US dollar, but the context is not very clear. And so this is just illustrated with the US dollar yen. The trend reversal is not confirmed. And so there is a tendency for the price to come back to the upside. But at this point of the day, I will no longer take a risk on any trade. Now let's observe also on the euro yen if the trend will come back to the upside. By the way, we are also approaching the Frankfurt close in a little more than 1 hour. And when we are approaching the Frankfurt close and 1 hour later the London close, in fact, any trades containing the European and the Pacific currencies will become useless, because there are, in fact, optimal period to trade, and this will answer some of the questions which has been asked earlier. How can we find the best pair to trade? So in general, the best pair to trade are linked to the trading sessions. We have 3 trading sessions: the Asian session, or often called the Tokyo session, the European session, and the US session or American session, defined by their currencies. If you take the American session, there are 2 American currencies, the CAD and the US dollar. And so during the US session, it's better to trade the pairs containing the US dollar or the CAD, the Canadian dollar. During the European session, how many European currencies we have? We have 3 European currencies, the euro, the pound, and the Swiss. And so during the European session, better to trade the pairs containing these currencies. So all the pairs, the euro pairs, all the pound pairs, and all the Swiss pair. And similarly, during the Asian session, we have 3 Pacific currencies, the yen, the Aussie, and the Kiwi. But of course, this is a general rule. You can observe very frequently on a chart that if you try to trade the euro yen or the euro pound during the second part of the US session, you will have not a lot of opportunities. So the sessions define very often the best trade to the best pairs to trade, but it is not enough. If I come back to the calendar, so here, calendar, depending, no, sorry, not the front, but the landing page, depending on the news can always define some exceptions. And in order to help our trader to better choose the pairs to trade, we have on one page of our home website, which is called the maxtradingsystem.com/newswatch. So it is a specific page which is accessible to everyone. It is a free page for anyone who are interested with this information. So we display all the geopolitical information we have to pay attention for the moment. Then we display a simplified calendar which contains only the news day after day which can impact the market, and we ignore all the news which usually have no impact in the market, even if some news are a lot described on some media. and then we describe the best trending pairs. And then when we match the best trending pair, because after all, the MAX is a trend following system, and to increase your odds to be profitable, better to choose the best trending pairs. When we match the best trending pairs with the news release, we can have a suggestion for a smaller set of pairs to monitor and to trade for each day of the week. And so the pairs for the Monday will be different from the pairs from the Tuesday, which would be themselves different from the pairs on the Wednesday, and so on and so on. And this is how I have chosen 6 pairs: the US dollar yen, the pound US dollar Swiss, pound yen, euro yen, and pound CAD. I have ignored the Swiss yen because made of 2 safe havens pair, and because they are pressured today, so it makes no sense to choose the Swiss yen. Then we give an alternative list, which are pairs which are usually less volatile, but which can create a more regular movement and which may be sometimes easier to trade. And then we have a small explanation how to interpret, so especially our calendar and the notations we are using. And then after that, we display the update of the previous weeks. And on the page, we have several weeks you can consult week after week after week. And if you want to be informed when this page is updated once a week, usually the Saturday or the Sunday, you can set your first name and an email address, and whenever the update is made, you will be informed. In such a way, you can consult freely the page. And it is really a free page for everyone. You don't need to be a Max member to access that page, okay? And I think that Craig will put the link so in the chat area of GoToWebinar. Otherwise, I will ask him to be kind enough to put the link, or I will put the link myself. So let me make a copy of the link. So Control C, and so here Control V. Let me see if this will work. Yes, I have put the link of the web page so that you can use it if you want. And the euro yen is still making its correction with an attempt of the trend reversal, but no entry setup for the moment. So Nilam, is it possible to have the chat link included in webinar emails? Somehow it is missing recently. I don't mean what you. I don't understand what you mean, Nilam. The link to have access to our private Max chat area. It is not given in all the email. When it is an open house session, so the link is not given. But the link is always the same. So you can use always the same link as in the Max course or our workshop. So it's always the same link. But sometimes, depending on the circumstances, there will be a different password. Okay? I'm going to give you the link in the Max chat. So just a moment. Let's see if this will work. Yeah, it's only for the max members, indeed. So it's this link, and it's always the same. Okay? And so you will have to pay attention to the password depending on the type of event we have. Yeah, and because it is an open house session, so there is no specific password today in our private Max chat room, but it is only reserved for the Max members. And the password is required when it is a specific course. So the password is different for the primer and for the standard course. So here we have a short entry setup probably coming on the euro yen, and let's see if this short entry setup will work. But I will not take the trade. We will wrap up the session in a few minutes. So normally the entry would have been here, and with a stop loss around this level approximately. So giving a stop loss size of 25 pips. Yeah, and I have to pay attention to our home base. Yeah, it's an aggressive entry, but it is a risky entry because the euro is still stronger than the yen. So this is typically a trade I will not take, just to illustrate that following a technical indicator only is never a good idea. In fact, it has been shown many years ago. In fact, it was in the 80s, 1980s. I don't remember exactly in which year, but I remember that when technical analysis was very, very often used by almost every trader, it has been shown that to be successful only with technical analysis, we need to have, or to be profitable, we need to have a winning rate of at least 72%. Below a 72% winning rate, if you don't have a right reward to risk ratio, you will not be profitable. And it has been shown also that whatever the reward to risk ratio you choose, 1-to-1, 2-to-1, 3-to-1, so we still require a high level of winning rate to become profitable. And so this is why, in fact, no indicator is predictable. And 72% winning rate is a high level of winning rate. And so this is why you can never follow blindly technical indicators. And I hope this will show the example. Technically, we can take short trades. We had on this red candle, I'm showing a valid entry setup, but I would be surprised to see the trade succeeding. I may be wrong, of course, because, I may be wrong in my own analysis of the global context. So this happens. And I can show you what has happened yesterday, for example. Let me prepare some charts. So here, it will take me just a few seconds to retrieve this chart, the chart of yesterday. Bias, intraday bias. And it was on the 7th, yeah. Let me show you how the price has moved after I have defined the directional bias for some pairs. The first chart will illustrate, so here the Aussie dollar. Just after the London Open, I have established a long bias, which is illustrated by this green vertical line, dashed vertical line. And you can see how the price has moved, in fact, upward, downward, and then upward. And so there was two possible trades to take, and this would have been two successful trades. If I take the crude oil, my bias was short, but suddenly the price has turned upward. This is an example when the price has moved not in agreement with my own analysis. And so we may have two possibilities in this case. Either my analysis was wrong, or the context is correct, but there is some price manipulation. This may happen too. But anyway, the price has moved in the opposite direction of my bias. But no trade. In fact, it was impossible to take a short trade, so in this behavior. Next instrument was the Eurobond. My bias was short, so nice short trade, and another short trade at the end of the European session. The Euro Aussie, my bias was short, and the chart is self-speaking. Next pair, the Euro CAD, my bias was short, and the chart is also self-speaking. Two nice short trades. Euro Pound, my bias was short, and again the chart is self-speaking. Two nice short trades. Euro Yen, my bias was short, a nice short trade. Okay, so Euro Kiwi, my bias was short. Short trades were possible, but the price was very, very choppy, so difficult to handle this trade in the time bar charts. Euro US dollar, my bias was short, nice short trade, not too difficult to catch and to handle. Pound Aussie, my bias was short, nice short trade, a small one here, and a nice short later during the day. Pound CAD, my bias was long, the chart is self-speaking. Pound Swiss, my bias was long, chart is self-speaking again. Pound Yen, my bias was long, the chart is self-speaking. Of course, sometimes we miss some nice correction, but this is not a problem. I have never a problem with a trade I don't take. I'm only concerned by the trade I take. So Pound Kiwi, my bias was short. The price has globally moved upward, but there was still an interesting short trade to take. Pound US dollar, my bias was long. The chart is self-speaking. The German DAX, the German stock market index, my bias was long. You can see the chart. The Nikkei 225, so the index for the main index in the Japanese stock market, my bias was long, a nice long trade at the end of the European session. The Nasdaq, my bias was long. The chart is self-speaking. Kiwi US dollar, my bias was long. Difficult to trade. The price was very choppy. S&P 500, my bias was long. The chart is self-speaking. The FTSE 100 in UK, my bias was long. Choppy market, but it was not impossible to trade, especially with the SAM. The US 10-year Treasury bond, my bias was short. Two nice short trades, clear trades. The VIX, the S&P 500 volatility index, was short. You know that with the futures contract, it's possible to trade the VIX, so a nice short trade. The US dollar CAD, my bias was short, two short trades. US dollar Swiss, my bias was long, so the chart was a bit difficult to trade, but not impossible. US dollar Yen, my bias was long, difficult to trade because the price has moved essentially downward, so this first long trade was not possible, and later on, they would have been possible, except perhaps for the last one. The Dow Jones, easy to trade, as you can see. Gold, my bias was short, not easy to trade, except two short trade, but not so easy to handle because we had some long bars. And that's it. And so you can see that with these 28 instruments I have illustrated, so lots of good opportunities following so the context as I have been able to analyze it. And in the few cases when the price has moved in the opposite way, there was no trade. And when the price was moving in a very choppy way, so even in the case of losing trade, the loss would have been very, very small, but lots of very positive trades. And so this illustrates the fact that when we analyze the global context and we try to understand the global context, so the result can be extremely nice with a very high winning rate, around 90 to 95%. There are some days when I have even 100% winning rate, but there are some days, just to be honest, there are some days when I have only 30, 40 or 50% winning rate. But I remember the worst case scenario I have had, it's a day with 10 trades following between 4 and 6 pairs, so 10 trades. My winning rate has been only 30%, so 70% of losing trades or break-even trade, but my day has been still positive. And so this is trading, in fact. So, and I will never insist enough on the way, try to understand the global context. So it's a lot of work to do, but it's a real rewarding effort. And if you want to trade professionally, if you even consider to become a professional trader making your living only by trading, it will be an obligation to understand the context. And you can see on the euro-yen, the trade is indeed a risky trade. So, because as you can see, the price now is making a pullback. Perhaps that this pullback will be deep enough to change back the direction of the trend. Because this trade is not, it's in the direction of the slow buyers, but it's not in the direction of the global context. The global context is still to trade long the euro-yen. But we are approaching the moment along the day when even a long trade will not become useful. So, okay, no last questions? No last questions? We will wrap up at 15, so in 4 minutes. So it's the moment now if you have some last questions. Oh, you're welcome, Dan. I always appreciate your comments in the chat area or in our private chat area for our Max members. Thanks, Stefan. Thanks, Ingrid. It's always a pleasure for me to illustrate so the Max when we have very specific and critical period like the non-farm payroll. The non-farm payroll is always a very, very difficult environment to analyze and to trade. But once you understand how to analyze the situation with the non-farm payroll, so you will be ready to experience any other news releases. Thanks, Rodolfo. Thanks, Francis. And thanks, Miodrag. Oh, welcome. Oh, glad to see you. Glad to see you, Miodrag. Yeah, Misha. Remember, Misha, indeed. Sometimes it takes a little time to remember all the names because I think I have a good memory of many names of our Max students or Max members. But now we have more than 2,000 Max graduates. So it becomes a little more difficult to remember all of them, especially when they use surname. Thank Nilam. You see on the US dollar yen, so the price has broken the balance area to the downside, as I was expecting. But still, the US dollar yen pair is a difficult pair to trade. If we consider the movement from a potential entry setup, so the entry setup was here, so the movement is only a movement of 35 pips, so not a big movement. Yes, Stefan. I will not repeat that to Chris. He is sleeping now because it's night time. So lunch money, yeah, indeed, Francis. Okay, so I see there are no other questions, so I thank you very much for your participation today. I hope you have enjoyed the illustration I have tried to show you with the trade risk management approach we have in the MAX. Unfortunately, the non-farm payroll has not provided good conditions to pinpoint nice trades, but at least the price action was still good enough to illustrate the trade risk management approach we have with the MAX, showing that when we have a deep control on the risk aspect of the trade and we try to cancel that risk progressively, then even when the conditions are not good, it is still possible to make some profits and even some decent profit so in the market. So, and for that, I thank you very much for your participation, for attention, for your questions, for your comments. We have indeed another activity tomorrow with our scrolling party with our MAX member, and it will be a scrolling party dedicated to the MAX standard and the MAX sum. So you should have already received some email invitation by Chris. Nonetheless, for all of you, non-MAX members or MAX members, I wish you a great rest of the week, a great weekend. Keep safe and see you next time. Bye everyone and take care.